morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Pete.
Lovely to see you, Andrew.
Good to have you back in the studio. We touched on last week India, and we thought we'd do a bit of a special on India this week. So we'll look at some of the numbers, some of the growth drivers. So GDP, once again, the chart there is a 5-year chart. Very solid figures coming out of India.
Yeah.
The GDP numbers are out later this week, which are forecast to be plus 7% once again. So plenty of
Nothing
optimism.
To be sneezed at.
No, plenty of optimism coming out of there at the moment.
Exactly right. You know, and you've got a younger, well, we're going to touch on that, but a young economy in the sense of age and demographic, and very robust. You know, what you're doing from a government perspective, construction, it's crisscrossing the nation with highways, tunnels, ports, you name it, they're building it. And you want to ferry or move 1.5 billion people, Andrew. It takes a lot of work, and they're doing it. And I believe that they're adding to the size of the German rail system. They're building that yearly in India.
Yeah, wow.
So that's the size of it, and it's quite incredible.
Yeah. So interestingly as well, there's a lot of money flowing into India at the moment. Now, from an external perspective, you can't buy Indian shares, individual shares. So a lot of people are doing that via the ETF. So there's multiple ETFs around at the moment. But once again, that's the 5-year chart there. It shows a pretty good response there. Not massive by any means, but I think
that
more
global
money,
appetite will increase.
More money will flow in for sure. So obviously the big story is India v China, population. Now this chart goes out a long way, of course.
Yes.
But India is obviously the most populous nation now. And as you touched on, it's a young nation. Very young. And with the issues out of China at the moment, not only the economy, but the real estate and the lack of children.
Yes.
You can only see that the gap growing.
Well, yes, and as you see there, Nigeria, Pakistan and Democratic Republic of Congo nearly matching as far as where it is at the end of the century. And China sitting under 800 million, or about 760 million people, and India, you know, at that 1.5 billion. It really is quite incredible what we're going to see over the next matter of decades. And China's really falling off a cliff as far as population.
Yeah, which brings a huge amount of other issues.
Social issues, yes.
Yeah, for sure.
And an ageing population. Who's to look after the people?
Exactly, that's right. Foreign direct investment, once again, it's growing considerably in India, but I think the key thing here on the chart is the names that are now investing into India and setting up factories and the like, so of Walmart, Google, Amazon, etc. So you would think that will only continue over the coming decade.
I'm sure. I mean, the appetite there, and it's positioned well in the sense where it's a big coastline, faces 2 oceans, and it's just, you know, a hub, only a 3-hour flight into Dubai, close to Russia, close to Saudi. It's really well positioned geographically versus China. Its footprint really is a lot of internal land, and that's where its population base lies. This has got far better weather. This has got far better, I think, conditions from an agricultural basis, and just overall, it's it's a dynamic country. You really, if anyone hasn't visited it, please go there. It's quite incredible.
Yeah, just an interesting picture here. These companies are big, sort of global US companies, but all of those companies, their CEO was born in India.
There you are.
Based into the US now, and probably educated in the US. But
no doubt,
there's a lot of other companies like that. But there's some names there which we all would know, and it's interesting how that the youth of India are very well educated.
Yes.
A lot of them are getting educated in the US as well.
And here.
Yeah, and striving to be the top of their field.
Absolutely, from engineering, mathematics, of course, strategy, marketing, some of the best university professors. I mean, if you look at the top business schools of the world, if you look at the Harvard, Wharton, and say INSEAD, those 3, the professors that are of Indian descent, and you know, I'm talking, they were born there, they went and did their, maybe they did their undergraduate in India, then they did postgraduate with a PhD in US and a top business school, and then they became profs in their own right and industry legends because of, you know, writing books and you know, research into the, you know, the frameworks of a particular study of business and knowledge.
Oil. Now, once again, with a growing economy, you're going to need a
lot of fuel,
oil.
man.
Yes. So That once again, this is just a forecast, but there's no doubt that they're going to be importing a lot of oil. But what India do is they refine a lot of oil, particularly for jet fuel, and that gets exported throughout Asia. They're the biggest exporter of jet fuel into Asia. So that demand for oil will only grow.
Yeah, exactly. And well, when you think of it, you know, electricity demand, you're looking at motor cars, everyone's got a motorbike or from a push bike going to a motorbike, then it's the consumption chain. You know, you'd come up to a little car, then you get a bigger car and trucks, and you've got a lot of things to move in India, so it needs fuel. And yes, when you're looking at that number, it really is, 8.2, 8.3 million barrels. Yeah, going to be a lot of demand. The world will need a hell of a lot more oil over the next decade.
Yes, for sure. And oil goes into a lot of other products, not only
bitumen, nylon,
everything.
You name it. Yeah. We could maybe do one of those, you know, the frameworks of where oil goes.
Yeah, sure. Well, looking at the oil price once again, it's sort of been range bound for pretty much the first 8 weeks of the year, between that $70 to $80
ping pong
amount.
man.
Yeah, it's sort of just hanging in there at the moment without sort of breaking out either way.
You know, and really, if you're looking at it, I mean, that chart tells a story, but if you narrow that down to really since Christmas to where we are, say 2 months, we've seen it up, down, up, down. It's played about 3 or 4 games, and it's been really sharp, you know, really nice moves to the upside, and then all of a sudden, 4-6% come off. Yeah. Then all of a sudden, hits the bottom, and then all of a sudden it goes up again. So that's what the momentum traders look for, and that's how you've got to study these markets.
Yeah, that's right. So it gives them activity if you've got plenty of volatility, which is good for them. So,
yeah. And the geopolitical war premium has been stripped out.
Yes, it's gone.
At the moment.
It has at the moment, yes. So that's the India wrap. We've got a bit of activity later in the week in the US. The durable goods coming out. We've got the PCE, which is obviously a big number to see where that comes in terms of inflation
and rates. And inflation,
yeah. And then
you've got the Kiwis, you've got next week you've got the Aussies. So yeah, it'll be a good week, and you've got Eurozone, their central bank meeting on the 7th of March. Yeah. We might even touch on the granolas. There's one, I'll throw that out there. The top 12 companies that make up the Euro Stock 600.
Okay. Yeah.
And it's quite fascinating because, you know, again, if you're looking at the S&P 500, 28% is made up by the Magnificent Seven. And then the stocks, it's very similar numbers. You know, that it's the old Pareto principle. The top 20% drive 80%.
That's right. It's certainly been the case in the last 12 months in the US, hasn't it? So,
you bet.
Yeah. All right, we'll touch on that next week as well. So thanks for joining us again.
Lovely to see you.
Okay, thanks, Pete. And that's the XM.com weekly market update.